Nike is down 5% after reporting earnings. It's been another disastrous report for the company. I've been bearish on the stock for almost 3 years, since 2023. I've been saying the stock is worth $65 per share. It's all public record. And I've been bearish on it while a lot of other people on YouTube, they've been bullish on the stock. But now Nike is worth $68 per share. So I'm going to talk about it, let you know my opinion. If I believe this is a generational buying opportunity on Nike, if I'm starting to get bullish on the stock, or maybe I'm still bearish, maybe everything is still a disaster and maybe we should wait for a lower price. So I really hope you enjoy it as always. Now for the estimates, they actually did a double beat. It was pretty stunning from the company. They did 54 cents versus 29 cents expected. That was very good. And they also beat on revenues. So that was pretty much amazing. But the sad part is that everything beyond that is pretty much terrible in this report. And they saw a strong demand in December, followed by a double digits decline in January and February. This is really, really bad from the company. And the thing that's worrying me the most from this report, it's really alarming, and this is what they said. They said out of the hundreds of suppliers and manufacturers that Nike works with, about 24% of them are located in China. If the retailer doesn't raise prices to offset the tariffs and it cannot push the costs entirely on its suppliers, Nike's margins are expected to take a hit from the new tariffs. There is, I believe, I think it's a 20% total tariff on China, and they did some retaliatory tariffs, and that's going to be really bad because 24% of the supply chain of Nike is from China, and they're not having their best sales ever, even with some promotions and many different things. Now, if they're going to have to raise prices to offset them and maintain margins, will they be able to do that? I personally don't believe so. I believe we're in a weak environment in general, and a lot of those companies are not commanding the pricing power that they used to command. So this is a major, major risk for the company. Maybe they can do some supply chain shifts and do a few things, which will take some time. But in the near term, this is a massive, massive risk on the company, and it's something that you have to pay attention to. But something that I really didn't like at all from this report is what they did with share repurchases. So with share repurchases, they had an $18 billion buyback program from 2022. They used 11.8 billion of it. Okay, so they still have like $7 billion left from the program. Now, out of those $7 billion left, he only bought back 500 million worth of stock. Now, if you really believe in the turnaround, if you really believe that you're going to turn around the company and you believe the stock is disgustingly cheap at a 5-year low, why would you only buy 500 million out of $7 billion? He should have bought a little bit more, at least a billion, billion and a half. They have 10 billion on the balance sheet in cash. What is he going to do with those $10 billion? I mean, to me, that didn't make too much sense. So if I was the management and I truly believed in the business, I believed it's undervalued, I believed I can turn it around, I would be buying stock like never before. And a lot of smart managers, they actually do that. Sometimes they even use debt to buy stock whenever the stock is disgustingly cheap. But either they don't believe the stock is cheap, or maybe that's some misallocation of capital. But there is some good things from the company. There is some improvements. One of them is inventories. Inventories has declined again around 2%. Not the fastest decline ever, but it's been declining and it's been getting better, which is good for the company. They also have had a lot of newer launches, and I'm not I don't really keep up with the sneakers industry and shoes and all these kind of things. But this is some kind of a new launch called Pegasus Premium, and it says it nearly sold out across North America, and it will scale through fall of 2025. Its Romero 18, created for the everyday runner, has seen outstanding results, and Nike plans to double distribution by mid-April. Now, this Pegasus Premium, I believe it's this one. So if this has sold out at $210, then this is actually some positive news for the company, that maybe the brand is still commanding the pricing power it used to, and maybe they could potentially offset the tariffs by raising prices here and there and keeping up with their margins. Maybe they cannot do it with with all these kind of shoes. But this one, the Pegasus Premium, is sold out at 210. This is bullish. This is actually very positive for the company. And I've been watching the CEO. I've been watching a lot of the advertisement he's been doing with women's brands on the Super Bowl and a lot of different shifts within Nike. I mean, you could see it, you could feel it, and you could see that he's actually trying to turn it around and he's trying to improve the company. So I see a lot of improvements, and this is the best time to start looking into the stock, because normally stocks, they bottom on bad news. They don't bottom when everything is great. They bottom whenever it's a little bit ugly. But at the same time, if you're betting on a turnaround, it's very, very risky. And most of the time, they take longer than you would imagine for them to take. Now, for my valuation model, this is a very simple analysis I used. I like keeping it simple. And I use the analyst estimates, which they expect this year to end around the 47% decrease in earnings per share. Then next year, 11%, then 28, 26, and 20%. Now, this is, again, in my opinion, very optimistic, because it's been over 2 years. 2 years of us waiting for the turnaround of Nike, and it has yet to happen. So again, we're betting that it's going to happen this year with Elliott Hill, the new CEO, which was the previous, executive. But he's doing a lot of good things, so it might actually happen. Now, assuming it does happen, and using this very optimistic case scenario, we would get $4.54 of earnings per share 5 years from now, going into 2029. Now, that's, again, too optimistic for me, but we're going to use that. Now, if we look at the P/E ratio of Nike, it has traded over the last 10 years at a mean of 30 times earnings, as low as 21 times and as high as 50 times. Now, just to keep it simple and to show you something, I'm going to use the best case scenario, assuming Nike trades at 30 P. I would personally never pay 30 P for Nike, but assuming it does trade at 30 P. Okay, so we take the $4.54, and we time it by 30 P, 30 times earnings, we get around $136 per share. The current price is $68 per share. We divide it by $68 per share. We get almost 100% on the upside over the next 5 years. So in this case, if I'm taking the risk to bet on a turnaround, and I'm just taking all those risks on the best case scenario with 20% earnings per share growth, 30 PE, all these kind of things, I'm only getting a double in 5 years. To me personally, for the risk reward, that's not enough. It's just not enough. Now, if I'm looking for 25 PE, which I believe is a little bit more fair with the company, and I get $4.54, and I time it by 25 PE, in this case, I would get $113 per share price 5 years from now into 2029. If I divide it by the current price of $68, this is only 66% on the upside for the next 5 years, which is pretty much nothing for the company. In this case, if I'm using 25 PE and I want to double my money in 5 years with the stock, I would have to buy Nike at $56 per share. So what I want you to take away is the best case scenario, I get it double in 5 years from now on the best ever case scenario. The mid-case scenario, which is, more reasonable, around 25 PE, I don't get it double. I would have to buy it at $56.50 to get it double. So for me personally, the way I would point it out and the way I would say it is Nike looks much better than it did a few months ago or a few years ago when it was $150, $180. With a newer CEO, with a potential change in sentiment, like what happened with PayPal, what happened to many different stocks when you have a newer CEO and he's changing things around, you have changes in sentiment. So for me, I would say that Nike is fairly valued here if you're dying to own the stock. Like if you're willing to take the risk of the stock trading on the best case scenario, then Nike stock is a buy. But for me, again, above $65 per share, I wouldn't really pay up. If it gets to the 50s, $55, $56, it's extremely, extremely interesting on 25 PE. But if you're buying it right now, you're betting on Nike trading at 30 PE 5 years from now, which I believe is too optimistic, and I don't believe it's worth the risk reward. So this is my main analysis on Nike. I like the stock. It's looking much, much better. I see what the CEO is doing, but it's still somewhat overpriced and it's priced to perfection on what I believe is the best case scenario. So for me, under $65 per share, closer to $55 per share, Nike makes much more sense if you're looking for a good risk to reward setup and something for the very long term. So this is what I would say about Nike. Not financial advice, just my opinion on the stock. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.